Welcome to Tuesdays with Lloyd, special edition on Parametric solutions. Join us live today from London, Ed Gaze of Lloyd, Neta from Israel, Parametric Solutions Insurance, Brando Soto from Boston, Vertex Pharmaceuticals, and Stillwell from California, Jumpstart Insurance. Leading discuss today is Ed Gaze, who is also spearheading Lloyd's Lab, the front and center of innovation at Lloyd's. So here it is, your co-host, Ed Gaze.
Thanks, Enya. Hi, everybody. Really glad you could all join us for this session, talking about one of my favorite topics, parametric insurance. And we've got some great speakers for you as well. So let me just give a bit more of an introduction to them. So Neta, she's co-founder and CTO, Chief Technology Officer at Parametrix Insurance. Parametrix provides downtime insurance for cloud and cloud application outages. And they were actually in the Lloyd's lab a couple of years ago. Hey, Neta. We've got Kate. Kate Stillwell founded Jumpstart, which brought parametric insurance to consumers, starting with earthquakes in California. Jumpstart was recently acquired by Neptune Flood. Kate is also a licensed structural engineer and past president of the Structural Engineers Association of California. Previously, she was product manager of earthquake risk models at EQECAT, now CoreLogic, and she lives in California. And then finally, really delighted that we've got Brando joining us, who's bringing the customer angle. So myself being Lloyd's Lab, Neta and Kate being insurtechs who are creating parametrics products, and Brando, who is a customer for us. So Brando is the director of insurance and risk management of Vertex Pharmaceuticals, a global biotech company that invests in scientific innovation to create transformative medicines for people with serious and life-threatening diseases, and they're based out in Boston. So he's been in the company for the last 9 years and is responsible for their global insurance and risk management program, including integrated risk parametric programs, so very relevant to this call. And his also is their captive insurance company. He's also a Lloyd's Council member and an associate in the enterprise risk management, and has been recognized as a fellow by the Risk Insurance Management Society. So he's got a very good background to be joining us on this call, basically. So I'm delighted to have you all here. Before I go in and find a bit more about what they do in detail, I thought I'd give my version of what parametric insurance means in case anybody isn't quite clear. So my point of view, parametric insurance products pay out a pre-agreed amount upon the occurrence of a certain measurable event, an event which is almost certainly going to have led to a loss for the insured. So this payout can be a single fixed sum, or it can be relative to the scale of the event. One area that I often see confusion on is about payment of claims for smart contracts and parametric products. And I think this kind of all gets a bit jumbled up sometimes with people. So I think payment should and is normally very fast with parametric products, because theoretically you don't actually need to confirm there's a loss usually. However, it's not automatic or instant, which I think some people have the assumption of. Also, it doesn't need to be on a smart contract. In fact, I've rarely seen any which are. But using smart contracts can lead to auto payments and can be a really good customer journey. So, I think let's keep to the core of what a parametric insurance product is, and let's have a chat to the team and see what they're doing with it specifically. So let's jump first to Kate. Can you tell us a bit in layman terms about what Jumpstart is and how it works, please?
Yeah, thanks for asking. Jumpstart has brought, as you said in your kind words, parametric to the consumer level. And so it's really incumbent upon us to be able to explain parametric in very layman's terms. And so the way we explain it is a lump sum is delivered immediately after a parameter, a data piece is met. And in particular, the way the Jumpstart product works is that a $10,000 lump sum is dispersed immediately after an earthquake with severe shaking as determined by data from the US Geological Survey. And this is essentially the red zone of the color-coded shake map that is produced after every earthquake. And the one thing that I want to mention is that people really get the visuals and the consumers really understand the if then. And they also understand that $10,000 is not enough to rebuild a home. And so they're not confusing it with a typical indemnity product. The $10,000 is really only intended to jumpstart their process of recovery.
Awesome, thanks. Yeah, that was going to be a question actually, because being a B2C product, do they really understand it? And it seems like they do, and they get the fact that they're getting 10 grand. That might not rebuild their house, but it gets them, money much faster, and they can do useful things with it. And just one more question before we move on to Neta is that, I wonder what led you to create this product. I heard about your background, risk engineering. But you didn't have any insurance background, did you? So how did you come about and decide to create this parametric product?
Yeah, thank you. It's really a labor of love, and the common thread is disaster recovery. So, as a structural engineer with a specialty in designing the structure of buildings to be safe in earthquakes, in particular, I recognized a missing piece in the disaster recovery puzzle. All of the spokes of disaster recovery, the having enough money flowing into the system is it's a big gap. And the solution that I wanted, the problem that I wanted to solve is, how can we bring our time and talents to all of the different spokes of disaster recovery, especially the missing pieces? And how do we get more economic stimulus, let's call it like disaster stimulus, flowing in, so that individuals can not only jumpstart their individual recovery process, but then that stimulus can plow back, and the whole community and the whole economy can accelerate the recovery process.
Awesome, right. So you didn't have an insurance background, Kate, and then Neta, you also didn't have an insurance background and yet created a parametric solution. So I see a trend coming here. So could you tell us a bit more about Parametrix and about how it came to be?
Yeah, absolutely. So hi, everyone. My name's Neta. I'm co-founder and CTO at Parametrix. Parametrix has created downtime insurance for the cloud and cloud applications. So for example, when a cloud goes down, we compensate the business that relies on top of that cloud for their financial loss. So for example, just last month, AWS is one of the major cloud service providers, and they experienced a major outage. And so any customer relying on the region of AWS that experienced downtime themselves. And so Parametrics compensates for that financial loss experienced by the downtime. Now, I don't have insurance background, although I definitely have had a crash course of insurance over the past 2.5 years. And myself or my founders actually didn't have insurance background. And so I think that created an advantage and disadvantage. The advantage was that we had a very fresh mind going into this process and thinking about how technology can solve this problem, because we all came from a tech background. But it created a disadvantage where we didn't understand the ins and outs of the insurance industry. And so I think what we actually did right very, very early on was all of our first hires were insurance background individuals and people that kind of completed that knowledge gap that we had going in. And we actually continue to do that until today. Of course, we have engineers and we have, every other department in a business, but insurance is always one that we continue to grow, and we really, really rely on their expertise.
Oh, it's great. I mean, from the Lloyd's Lab point of view, I do tend to see a lot of people coming up with ideas for new insurance products, and generally those often tend to be parametric products, because I think it's something that people can relate to. Have you found like brokers and customers really get it and they get what the offering is?
Yeah, definitely. So customers absolutely, they experience downtime firsthand. They know how much it hurts, both financially and just from a business perspective. And so customers absolutely get it. And the simplicity of the parametric product makes so much sense to them. Brokers, I think we were actually pleasantly surprised to see that they get it more than we expected. I think a lot of what contributed to that was the fact that cyber insurance exists. And if I take a step back and I look at cyber insurance versus cloud downtime insurance, the concept of cyber is a lot more complicated to understand. A cyber attack and how that works and what happens is a lot more complicated. And so cloud downtime insurance actually, made a lot of sense to them. So, I mean, of course, there are outliers and there are areas where we need to educate more than others, but I think we were very pleasantly surprised.
Cool. Awesome. And finally, Brando. So Brando was on a prep call with us, and we were like, we've really got to get him on the actual call. So I'm really glad you could jig your diary around and make it on the call with us, Brando. Can you tell us a bit more about your role and why that makes you interested in parametric products?
Sure. So thanks for the invite, Ed. I think that it's the simplicity, I think, to Neta's point about sort of it takes away a lot of the complexities. You get your predetermined triggers is specific to your needs as an insured. You're going to get a quick capital infusion, without having to go into a complex loss adjustment process. So I think the simplicity speaks to me and as to why we looked at it from a Vertex standpoint. And also there were different moving pieces within our program that we wanted to tackle as it related to NatCat. So we wanted to apply a couple of these different solutions to some of the things that we were doing on the broader property program.
Cool, thank you. And have you got any more? You spoke interestingly about the value proposition of Parametrics when we had a chat the other day. Excuse me. Is there anything else on that you'd like to say? Excuse me.
I think the capital infusion is one. I mean, anything that can offset a P&L or balance sheet hit for me is really important, right? So as we look to take significant deductibles on some of these programs, it's nice to have something that can offset that P&L impact. I think that's really important. I think the simplicity of the trigger, the trigger's there, right? You work with Kate and you work with Neta on finding your specific parameter. There's so much data around now, right? To Kate's point on Data GeoSurvey or NOAA or some other data solution provider, that you're able to sort of design and build your own custom product around your specific needs. So that's one of the things that I think is a value add for us.
Cool. And like simplicity being one of the things that we've talked about, and it's a focus for us at Lloyd actually at the moment, simplifying insurance products for our customers so they understand what they're buying and also that payment is faster. We want to pay claims before someone knows they've had a claim, and parametric products are kind of one of the most obvious ways of achieving that goal. In some cases, we want to do that, not every case. So parametric products have the massive potential to be so simple because an event happens and it triggers the policy and payment can be made pretty quickly. Are you guys finding that you get any pressure to kind of add complexities in that you don't think need to be there? And how are you trying to battle those? And do those complexities come from where from? I assume not the customer, but maybe the customer or the broker or the insurer. Kate seems to have triggered a smile for you. I'll let you.
Yeah, so it's absolutely in our mandate to keep the product as simple as possible as we're introducing really a new concept to consumers. And until and unless it gets in the hearts and minds of the masses, it really needs to stay simple, or it's just going to die on the vine. And we get pressure. We do absolutely get pressure, not from the customers themselves, but from the brokers who are just familiar enough to be dangerous. They know enough to be dangerous about Parametric, and they're like, why don't you introduce multiple tiers of payment, and why don't you introduce all these bells and whistles? And okay, those are super creative ideas, and we're not gonna smash your ideas, but let's just walk one step at a time here. And sure, for sophisticated customers, absolutely, let's think about, like Vertex, let's absolutely design the custom parametric product that fills all of the little gaps in the stack of their financial hedge mechanisms. But as we're introducing, we have to keep the audience in mind when we communicate what the product is, so that there's product market fit, as we say, as you know, from Lloyd's lab, as we incubate the startups and bring the products to market.
So Neta, I'll come to you in a second, but Kate, on this topic, we've got a question saying, on the $10,000 Jumpstart recovery monies, are there specific recovery measures the monies can be used for or not used for, i.e. used for water, groceries, hotels, etc., or is it for property damage and reconstruction costs? And could this be an area where complexity comes in? Because if you're trying to then define what they spend the money on or what the costs are for, is this kind of something you want to step away from, or something you'd encourage?
Specifying what the money is used for would be an example of adding complexity. And we've removed that by saying that the money can be spent on any additional expenses that you have that are caused by the earthquake, whether it's additional water, whether it's additional childcare or elder care, whether it's filling gaps in the consumer P&L. I think that our customers are thinking about this money as I said before, kind of like disaster stimulus, in the same way that Vertex is thinking about it, being able to tide over and not affect the day-to-day, the month-to-month cash flow.
Cool, thanks. Neta, have you been finding pressure to make them add complexity, or is that something that's not really been a bother for you?
I think probably less so, but definitely there have been areas that I can think of that potentially we could have we've had to push back a little bit. I think in general we have really good partners that really understand the product that we're creating. Maybe one area that I can think about, and that maybe kind of ties into one of the questions that was asked in right now, what I see, which is, what is the regulatory environment for parametric coverage? So for example, I can give one of the things that we needed to add, and in our case, it actually was something that we gladly added, was the declaration of loss. So essentially, the claim process, which is extremely shortened, when we identify downtime, and we have a monitoring system that we've built, proprietary piece of software that we've built to identify these outages, then we send the declaration of loss to the customers that were impacted, and then they need to sign that. And so that's an extra step that needed to be added in. And it was something that we saw the benefit of, because there does need to be a loss in order to have the parametric coverage pay out. Where originally, when we set out on this product, we didn't think to add that step at first.
Right, cool, thank you.
Ed, from a customer point of view, I think if you add a lot more complexity, you sort of lose the attractiveness of the product, right? Because if not, I'd be going back to traditional indemnity insurance, right? And having to deal with interpretations on both sides as to what a loss means. And I think that the parametric product, the way it is now, and the way Kate and Neta explained it is as simple as it gets, and it adds the value that we're looking for. Yeah.
So Brando, also, go ahead, Neta.
Sorry, Ed, if I can just add, I think a lot of the benefit of the parametric product that a lot of the times is overlooked is actually not the trigger for payout or the quick payout, although those are definitely very nice. A lot of the times the benefit is the pre-agreed payout terms. So, in a lot of the times the claims process of back and forth of what the actual loss is really kind of, bogs down on the customer itself. And I think in most cases, and I don't have the numbers, but I'm assuming this percentage is very high. In most cases, I'm sure the customer thought they would probably get more than they actually did. And so when you pre-agree on the payout terms and what those are going to be and under which circumstances, that actually leaves a very good customer experience for the customer when they get those terms that were pre-agreed and not less than they expected.
I'm going to echo what Neta just said, is that our customers also love that feeling of certainty, because uncertainty creates anxiety in a person. And yes, they love the fast payment, but they mostly love the feeling that it's like a guarantee. It's like an if then, and they know what they're going to get. They know what they can expect. And amidst all the uncertainty of the event that happens and all the craziness, the chaos that happens, there's at least this one thing they know they can rely on.
Yeah, if this then that. Yeah, that's cool. Brando, are you demanding or seeing other people request like a mixture or a bundling of parametric with indemnity products?
No, I haven't seen that at all. I think I'm just sort of, I've just seen the sort of the traditional, what we're seeing today, which is a mix of NatCat products that are available. And, Neta's product is pretty new to me. So I'm interested to hear more about that. I wasn't aware that that type of parametric product was out there. So there's a lot more that I need to learn myself.
Right. It's something which I've not actually seen myself either, but heard a bit more about. Neta, Kate, either of you been seeing people want to try and bundle up your product with others?
I have. I haven't, and actually we think that in a lot of times it makes a lot of sense. So our product bundles very nicely with cyber insurance. They're both very tech related insurance products, and we've seen them bundled up very nicely. A lot of the differentiators between our insurance and cyber insurance, although they're both in the tech space, is that we cover cloud downtime for almost any reason that the cloud goes down. It doesn't need to be cyber related or anything to do with that. It also has nothing to do with the customer. So the customer cannot influence this incident, whereas with cyber, they definitely can. If their security isn't up to date, or if they don't have firewalls up, they can be in a higher risk. In this case, in the cloud case, the risk isn't in the customer, the risk is in the cloud itself. And so they cannot influence that. Our waiting periods are also down to 1 hour, which is unheard of in today's market. And so a lot of customers like that really short 8-hour waiting period. They feel like it covers a lot of the gap that cyber has with those longer waiting periods. And so we've seen it bundled up really nicely.
So if the cloud goes down for 1 hour, that's when your policy kicks in, right? And every 15 minutes, there's an increment.
And no dollar deductible either.
And no dollar deductible. And there's been a question, does Parametrics cover for social media outages? And I guess that's if the cloud platform has, then yeah. If it's the cloud platform, you're looking at that rather than.
I think the question was maybe referring to social media, I don't know, content people that have a big social presence. And then if, I don't know, Facebook or Instagram go down, that is more a B2C product, where our company is structured in a B2B matter. And so we've heard of that, and we've kind of played around with the idea. That's not something that we're offering at this moment. But if it's a business that relies on social media, and the reason that social media went down was the cloud, that would be covered. But that's kind of one of those edge cases.
Cool, thanks. So we've got a question about, are there any industry approved reference that a risk manager can look into as a base for understanding the complexity of the triggers? I mean, I know there are various insurtechs out there which will actually help kind of create an index or create the right kind of data set that you can rely on when you're creating a parametric product. But then others like create their own, which I think you guys have done. And so Kate, I was going to ask, like, when you were creating Jumpstart, how did you go about getting a reference, getting the actual data that you're going to be using? How do you know it's something you can rely upon and the customer can be confident in?
Yeah, I think this is where our Neta's and my backgrounds from the product domain really worked to our advantage, because I was already very familiar with earthquakes and their effects. And so I worked with my knowledge as an earthquake modeler, as well as the knowledge of earthquake scientists in my community, to determine what is the earthquake that's going to cause widespread disruption that will cause 90% of people to have this amount of money or more in expenses, mostly indirect expenses based on our earthquake modeling, with a 90% confidence level. So we chose a trigger that was sufficiently high so that then when we went to capacity providers, when we went to Lloyd's, and when we went to the departments of insurance, we had a very strong basis of strong foundation to be able to say this is a very plausible trigger for this is the right match of the trigger and the payout amount. If we had a payout amount that would ended up being a windfall in too many cases, then it becomes more of a financial hedge than it does an actual insurance product. And that actually leads into quickly a point that I want to make, which is that insurance is really the vehicle for Parametric. Parametric is not necessarily an insurance product. It's a financial transaction, right? And there's this trigger. But in order for it to qualify as an insurance product, it needs to have this balance of the trigger versus the payout. And it also needs, in America at least, this notion of the proof of loss and the confirmation of loss, which Neta described earlier. And so that leads into another question that's in the Q&A, which is that do people have to prove their losses? Yes, for the Jumpstart customers, and I think this is becoming the case for a lot of most of the parametric products that are structured as insurance in the United States, the insured does have to attest that they have or will experience that amount of loss or more as a result of the triggering event.
Yeah, so I understand. I think it's jurisdiction dependent, isn't it? I think US is probably the case when you have to maybe just like confirm that you've had a loss and not actually like measure it or quantify it. You just got to say, yes, we had a loss. Whereas I think in other jurisdictions, you might not need to. Brando, what's your understanding? What kind of parametric products do you guys have? And are you like, how are you measuring, have you got kind of sensors in your building? Are you using like public data to understand if there's been a potential loss?
Yeah, so we're relying on public data. I think, some reliable sources, I mean, it doesn't get any better than NOAA in terms of assessing your potential storm surge for where we are located, right? So we depend on public, and then for certain adjustment processes, we do have an intermediary that acts as an agent to verify the loss and can solidify the data that we're getting from that public source, so we can easily get the payout and then work with our potential partners to settle the claim with the proof of loss. So for us, it's all public. But again, we're talking about basing the triggers based on our models. And so we are able to work with our partners on developing the product that works for us based on our specific risks. So, we're in the seaport. We know there's a storm coming. We know the data around it. We know the models and what the potential loss is. So we can say, okay, well, here's our interpretation of our loss. What do you guys think the loss is? And we come together on the specific parameters that work for us. And I think that's really important for us.
Yeah, and so you're doing that up front. And Neta, there's a question in the chat, in the Q&A, asking about, can you help your customers up front determine what their loss would be? And that's something you guys do, right?
Absolutely, yeah. So we segment out companies by many different parameters, and we have recommendations for each. It can be industry type, size of the customer, size of the company based on employee size, revenue size, who their customers are, if they have SLA liability in place. We take all of that into consideration, and we have recommendations for the customer. And at the end of the day, they can choose to increase or decrease that coverage amount to a reasonable amount. But yes, we absolutely have recommendations.
I think it would be beneficial for the risk managers and the brokers to sort of get a better understanding of the exposure before starting those discussions. It's always helpful because no one's going to know your risk better than you, right? And so that if there's a 2% chance, 0.02% chance of a flood happening, then what your expected loss going to be. If you know that, then you're going to have better discussions with the parametric insurers. Yeah.
So keeping on the kind of data and understanding your risk point. So Neta, I know when I first met you guys, you were showing us that you'd captured loads of data over a period of time on not just cloud outages, but like that, not proper full-on outages, but kind of little blips in service. And that was helping you build up a picture of how likely a proper outage is for an hour or more. And I get you guys are using all that kind of information, not only to price up the risk for the insurer, but also to help educate the customer on how likely these things are to happen, right?
Yeah, absolutely. And that amount of data has only grown. Our monitoring system produces over 675 million data points a week. And that includes continuous monitoring data on these clouds and cloud applications, and captures even those small blips that we later put into our models, because we have seen that the small blips teach us a lot about the bigger outages as well. So we take all of that into consideration.
Neta, is there a specific number of providers that you're following, or do you just follow all of the cloud service providers?
So we usually start off from the top 3 or 4 service providers in any segment of service that we're going after. So for cloud, it would be Amazon's AWS, Google's cloud platform, they call that GCP, and Microsoft's Azure. We also do Oracle as well. So those are the top 4 cloud service providers. We're releasing this quarter a CDN, which is a content delivery network product. And those are also the top 4. So Cloudflare, Fastly, CloudFront, and Akamai. Those are the top 4 CDN providers. And that's kind of how we segment everything else. We also have an e-commerce platform product for platform downtime, bringing down large e-stores, and those are also the top cloud application providers like Shopify, for example. So yes, it's growing. We target the top 3 to 4 generally as a start, and then we keep adding more and more to our product offering.
I think we could jump in, Ed, and just extrapolate this conversation a little bit and say that the data sources and the data analytics absolutely go hand in glove with the providing the parametric products. And I think that one thing to remember is that the source of the data has to be something that the audience, the buyers, really understand and relate to. So for the internet, and so for Neta's technology companies, it has to be CloudFront and all of these other data sources, because that's what they're used to and that's what they observe. And so as Jumpstart develops a flood product, for example, flood is very interesting, and maybe Brando can speak to this. We have to access data sources that the recipients, that the insureds understand, trust, have access to. And for flood in particular, as opposed to earthquake, that data is going to have to actually come from multiple sources, not just a single source, because the stream gauges, are not sufficiently dense to be able to rely only on the stream gauges. It also has to be sourced from maybe crowdsourcing, maybe satellite data, and probably a whole conglomeration of all those things, so that it really matches the insured's experience of what the actual event was.
Yeah, I think that that's one of the disadvantages of the product, right, Kate, is that, not everybody has access to all of the sort of public information, right? So we have stations nearby, but if you're, in the Midwest, you might not have a station near you. And so you're going to have to create some sort of location specific trigger which might be miles away from where the actual event is going to happen. So that's probably one of the downsides. I mean, we're in a different situation, but I see that as a downside to Parametrics is sometimes you just don't have enough data, right, near the location of where you're looking to buy the product.
Yeah, certainly see that. There are others. So there's various insurtechs where they're maybe Kate, I think you guys too, install your own sensors on buildings or whatever, so you get actual information about the specific asset that you're insuring. Kate, we have a question. Not knowing much about these products, how widespread are those that buy it, and what type of organizations are main clients? Before we go into kind of like corporates, yours is like a B2C product. What kind of profile customer do you have? Is this only for the really wealthy, or are you looking at this being available to lower middle income households?
Yeah, so with the ambition of filling these protection gaps, we designed a product that is specifically accessible, financially accessible to, let's call it the middle 60%. So the poorest of the poor is not going to be able to afford $200 or $300 a year that it takes to be able to buy a Jumpstart product in California. But the richest of the rich, $10,000 doesn't really mean that much to them. And so this is for the people who can, who have enough money to go and splurge on a latte once in a while. But for whom, the savings account, the paychecks get in. So this is from the B2C point of view, a product like ours is really for, as I said, sort of a really central middle portion. But there are parametric products that are designed specifically for higher net worth individuals. And I think Neta and Brando can speak to the other customer types that are buying into parametric.
Yeah, definitely.
Yeah.
In our case, it's the technology companies. So we see a lot of software as a service companies. Generally, I'd say SME and larger are really where our target market lies. So any company that is a technology company and relies on the cloud for their production environment is our main target market. What we're seeing actually, and this is interesting because it's a lot of this is due to COVID. What we're seeing is that more, I'd say, traditional companies that were not sitting on the cloud previous to COVID are now moving to the cloud, and they're actually interested in extra protection that will help them kind of make that move over to the cloud. So we've actually seen a lot of different sizes and types and industries have a lot of interest in purchase our policies.
Yeah. We've only got about 5 minutes or just under left before Enya wraps up. So we've had a couple of questions regarding claims and losses. So one from Don Coyne, who I happen to knows his stuff about parametric products. So he's asking, what do you think insurers can do to make the proof of loss process as smooth as possible? I mean, Brando, have you kind of experienced any losses yet through parametric products that you'd be able?
I have not. But from what I hear, it's pretty simple. So I'm not sure what else they can do. I mean, it's really, to Kate's point, and I think she spoke a little bit about this, is, you can use the money as long as you can prove the loss on anything that you want. It doesn't get more simple than that. So I'm not sure what else insurers can do.
Well, I think that Neta, you guys are literally, do you have to prove the loss for Parametrics? I didn't think you did. No. But Kate, you guys said you do, particularly in the US. So what could insurers do to streamline that?
Well, I would say that anything that is push to the insured, as opposed to making the insured come to the insurance company, and we have a streamlined process for that in Jumpstart. The other thing I would say is anything that doesn't any policy, avoiding policy language that requires a detailed audit. And now Dom understands why I'm answering this way. But if there's policy language that says that technically the money can be clawed back, that's just not very consumer friendly, because realistically, the reputational risk of clawing back money is far, far greater than any money that could be clawed back in the case of a windfall. If you mind, Ed, I'm going to take one more minute to explain something we probably should have explained at the beginning, which is that companies like Jumpstart and Parametrics where do we sit in the insurance value chain? Jumpstart, and I think Parametrix is too, a cover holder and a broker. And so what that means is that we use the Lloyd's market to access capital, and we pay for being able to access the capacity providers. And there were a couple of questions that made me realize that we were unclear about that.
I just want to jump in here as well, Ed, sorry. Yeah, we're an MGA, so maybe slightly different, but actually I do want to circle back on that question that Dom had, because I think the question was actually referring to insurers offering also traditional insurance just on the claims process itself. And actually, I think that what the parametric model has taught us is that, the simplicity of the model can be applied, I think, in other areas, even with a claims process, where really what you need is just more information that you yourself gather. So instead of relying on the customer to provide all the information that happened in the incident that they claim had created a loss for them, is to gather that as much information as possible yourself. And then you also have that to bounce back versus what they say, and to be able to make that entire process shorter. So the more you have, the more information you have on these incidents that cause customers to file a claim, the shorter the process you can create, even with the claims process. So I think just in general, shortening, the claims process and making it as smooth as possible is a very valuable thing. It doesn't need to be a parametric product necessarily.
Yeah, really good point. And yeah, Kate, thanks for clarifying the MGA point. So it's interesting, actually, a lot of the parametric products we see at the Lloyd's lab are either already MGAs or cover holders, or they end up becoming MGAs or cover holders as a result of being in the lab or in the Lloyd's product launchpad, where they want to kind of take these ideas and these product ideas. Typically, they start off with data and they know the problem, like you both did when you were creating your ideas. They know the problem, they know what customers really value, and they've got some data, and then they go on and build a product around it. And yeah, we tend to see them doing that through the MGA route, and it seems to kind of be a very popular way of getting these new products to market. We've got more questions than we can answer, I'm afraid. And I was informed by Enya that she needs the last 3 minutes to wrap up, and we've only got 2 minutes left. So I'm sorry, Enya, we overran, but I think I'll hand over to you now to close up, and maybe we can try and answer some of those questions in the chat before we close up.
Thank you again so much, Ed. Thank you, Kate, Neta, and Brando for the insight, which is really exciting. I wish we can just go on, because I see so many questions keep coming in from Q&A. So please stay in touch with Neta, Kate, and Brando, as well as Ed on LinkedIn, and seek us out. At the same time, please mark your calendar for Tuesday with Lloyd's in February. We have exciting showcase of Lloyd's cyber market starting on Tuesday, February the 8th. And that'll go on for a mini series over 2 weeks of time. So please join us. Again, thank you all so much. And we would love to answer a few more questions if you have. Back to you, Ed.
Awesome. So, I mean, we got another 2 minutes, have we? Is that, you give me 1 more minute? You give me 1 more minute. Okay, cool. Well, I'll just let you guys just wrap up with a final thought, and we'll close off. So I'll go Brando first. Have you any final reflections?
Yeah, I would love to see more products out there. I think as a risk manager, I'd love the options. Moving away maybe from NatCat, maybe into some of the, forward-looking risks, maybe climate change, maybe credit, or maybe some other climate-related type triggers. It'd be interesting to see as we look at climate change impacting the world. It'd be nice to see some of these credit products being available.
More products. Apply to Lloyd's Lab with new product ideas, please. Neta.
Yeah. Well, first of all, I really enjoyed our conversation. I think maybe my last and final notes are that we see a lot of insurtechs trying to go against the insurance industry. And I think our approach has always been to work with the insurance industry. I think that's a very bad thought to think that you can come from outside of an industry and be smarter than everyone else in it. So I think we've always worked alongside our insurance partners and just incorporated new thoughts into everything that we're doing. But it's always been a very, very good partnership for us.
Awesome. And Kate, just final reflections and we'll close up.
I'm just so excited about the potential for parametric insurance to fill the protection gaps and therefore build economic resilience for our communities, for our economies, and for us as individuals. So thank you.
Awesome. Thanks everyone for your time. Check us all out on LinkedIn. And if you've got a new product idea, then Lloyd's Lab. Take care. Thank you very much.
Thanks.
Thank you all so much.
Bye.
Take care.
Thanks, Ed.